All right, Helene. Well, looks like we have the room opened up here and here ready to welcome everybody in. Have a few folks piling in the room right now. But yeah, we're here off and running, ready to go for today's version of TOD Live. Super excited to be here with you. And Helene, yeah, these markets they're interesting. They've been kind of just levitating in overbought territory for really going on 3 weeks now.
Oh
Um,
yeah.
but just not slowing down. They're just kind of hanging out there, and maybe that's just more of that rubber band just kind of getting stretched out a little bit further. But interesting setup in the markets. What do you think?
Absolutely. I mean, yeah, we've been talking about the market being overbought now for an extended period of time. I mean, on these TOD lives, but the thing that we keep on mentioning is that this can go on for quite some time, and this what run is really proving that point. They are overbought, but it can go higher for an extended period of time before it has that pullback. Eventually, of course, it will have that pullback, but just right now we are not seeing it. And sometimes when we are on these runs, you'll even see on that S&P chart, it'll just touch that upper channel and then bounce right back up off of it. And that's like a little mini pullback of sorts.
Yeah, exactly. Yeah, we kind of got that earlier this week. It was on
Mhm.
Monday and Tuesday we kind of traded down and touched the upper counter channel band there. But yeah, I mean, as you can see here, clearly what we're just talking about, we've been trading above the upper channel every single day for almost 3 weeks now. And certainly can stay up there for some time. You can stay on the RSI on the very bottom, our lower study down here. It's starting to creep back up there into overbought territory. At least in the short term focus as well, you can see that RSI is coming in just a little above 75. So, that's starting to get a little overheated as well there. So, still fully anticipating, a bit of a pullback, to come here in the next probably trading week or so. We're starting to getting to some major earnings next week. So, we'll certainly see what happens. It's probably going to dictate largely where stocks are going to go from here. But after this massive run we've had really in the last 3 to 4 weeks, stocks are definitely due for a bit of a cooling off period. But as you said, they can hang out trading and kind of in overbought territory sometimes a little bit longer than you think before you ultimately get that little bit of retracement. Um, but Helene, what are you seeing in this chart right here? Talking, kind of zooming back out, looking more at the longer term and medium term. We've really touched on the short term, what we're anticipating with likely a pullback coming up, but still looking okay in the long term.
Yeah, absolutely. I mean, it you can't ignore the pullback that we had earlier this year, and the tremendous V-shaped recovery that we've had has been, remarkable, because I remember once we did see signs of bottoming out in that correction, people said, "There's no way this is going to be a V-shaped recovery. There's no way. It's not possible." And here we are, just a couple months later, and we're already at new highs. I mean, it's hard to believe. So those new highs, I will say, and that recovery speed, it is bullish for the market, for the S&P. Now, I would expect a nice healthy pullback still in the medium to long term, but overall, the technicals are saying that we're bullish. I mean, the SPX is above, two key moving averages that we have there on the chart right now, and things are bullish until proven otherwise. I mean, at this point, I think one headline could pull things back, at least in the short term, but the long term technicals are all flashing green and buy. What do you see?
Yep. Yeah, no, I totally agree with you. Definitely have some great long-term signals here with the technicals, having the 50-day above the 200-day. Obviously, the index is trading well above both of those, which is a great sign to see too. And still just making a great, really strong series, a bullish pattern it's been trading in, making a nice series of higher highs and higher lows. Really for several months now.
Mhm.
And of late, that's started to become new 52-week highs. Once towards end of last month when we finally broke out to those new 52-week highs, hit several of them in about a week and a half's time. Of course, this last week hit the new all-time high on Thursday, just a week ago. So still, really great looking technicals for the long-term bullish trend. And Helene, I think that kind of leads into the next thing we're going to talk about here. We're seeing, excuse me, some great outperformance, really strong technicals, really strong price action on the S&P at the index level. But we're also starting to see some, signs that other stocks are starting to participate as well. Still have really great relative strength from those market leaders, the big tech stocks, the ones that are, kind of connected at the hip to the AI revolution. But you're starting to see a lot more, going down the list of the S&P 500 stocks. You're starting to see a lot more of those constituents of the index starting to participate to the upside. And you can see that right here. This is an S&P 500 equally weighted index chart right here. So of course, this one, as opposed to being market cap weighted like the headline index, this one here, all 500 stocks carry the equal weighting. And you can see, it's obviously been trending up, coming out of the April lows, but there was a period of time here where it was consolidating, really kind of stuck in neutral trading sideways. But you see right here, there was an inflection point higher towards the latter
Mhm.
part of June. You can see SPX was really starting to inflect higher. And it's had several days where it's actually outperformed the headline index, because a lot of these lower, market cap weighted stocks in the index, they're starting to outperform on some days compared to, the really, market cap heavy leaders of the index. So, seeing this break out to a new high today, really nice price action, up about 0.75%. It still hasn't taken out its all-time high. It's still just a little bit off
Like
of
it's
that.
pretty close though,
It
right?
is, yeah, it's about 50 points. So we might be looking at a new all-time high on the equally weighted index here rather soon, which would be a great sign. Looks like just yesterday we actually got a golden cross on the equally weighted index. We've been talking a lot about on the market cap weighted index, but you can see right here we had our 50-day cross above the 200-day. So some really great signs, starting to see some broadening out, some broader participation in the rally to the upside. So anything else you want to add on this chart here, Helene?
Yeah, we hear a lot of talk during a bullish run about the breadth of that bull run and how many of the stocks are really participating. If it's just those big names or if the smaller ones are running too. And so, this chart is showing exactly that we're seeing that widening out, as Blaine had said. And that's extremely bullish sign because it, helps to confirm the sustainability of that bull trend. Because if just a couple of stocks are really carrying everything higher, well, then it's pretty easy for things to break down. But when we see that broad bullish rally, that really helps with the sustainability of it.
100%. Yeah, it's nice to have some of those other constituents starting to, carry their own weight too and start participating, and just seeing stocks really across the board starting to participate to the upside, being bullish. And to build that case even further, this is another chart we brought for you all today just to illustrate this point and drive it home even further. You can see this one right here, what this line is representing. This is just a line that's illustrating a percentage. And so you can see the percentage numbers over here on the right-hand side. So we're currently at about 65%, but what this is trying to quantify is the percentage of S&P 500 stocks that are trading above their 200-day moving average. So signaling that the stock is in a long-term confirmed uptrend. So
Mhm.
you can see, obviously, this, really fell off heading, through March and April, making those
Yeah.
lows in April there as, stocks broadly were selling off and losing value. But you can see there was a quick recovery as the market, started to broadly recover. And again, it's very similar to the S&P 500 equal weight chart. You can see a very similar trend here, but you can see right here, we've again started inflecting higher of late, having more and more S&P 500 stocks start breaking out to those long-term bullish uptrends, confirming they're in a long-term strong trend. And you can see now broke out to a new short-term high. We haven't quite hit, we hit 66 for the first time today. The last time we were trading there was actually, you can look all the way across the chart back here to roughly mid-January was the last time we had about 66% of S&P 500 stocks in confirmed long-term uptrends. So that's, just an even further sign showing you that we have a nice broadening out happening. And that's exactly what you want to see in a really healthy bull market. You want to see those other constituents of the index starting to participate, starting to rally, catch a bid, start seeing good price action. So seeing exactly what we want to see right here. So Helene, anything to add on this one?
No, I think you covered all there, Blaine.
Perfect. And one final thing, I know we have a couple trades we want to share with you all watching today, but the last thing I want to touch on right here You may or may not have seen this chart here before, but this is one Helene and I like to look at every once in a while, just to kind of get, feel the temperature of the markets, feel the sentiment, see how people, institutions and retail, kind of how they're positioned. And so what this is a ratio chart. So it's taking, two individual figures and, just doing some good old fashioned mathematics and just doing some division. But it's looking at the total put call ratio across the market. So this is all stock options, all index options, all puts and calls that are traded through the CBOE and US market. So that's what this ratio is. And so the put number of put contracts is going to be your numerator or top number. And then so the number of call contracts is going to be your denominator or bottom number. And so how to read this chart is when you start seeing this line inflecting higher and trading higher, spiking like this, that is signaling that there's starting to be a lot more bearish positioning in the market. So that means people are loading up on puts. They're trying to add protection to their portfolios. They have a really bearish view of the markets. They think stocks are going to be selling off either very quickly in the short term or going to be in a prolonged downtrend. That's how they're positioning themselves. So you can see several spikes here. They're correlated with, this was the sell-off related to DeepSeek, last year in late July, early August. This was the sell-off into early December towards last year. Of course, this was the massive sell-off we saw earlier this year, largely related to U.S. trade policy. So you can see, it's a very clear sentiment indicator of how people are positioning themselves using options in their portfolio. Now, to the flip side, when you see it start spiking down, that means typically, you can see a couple times right here where that's starting to signal peak bullishness. So people are, kind of exuberantly bullish. They're over the top bullish, maybe, a little too much so. And so that's kind of how you read this chart here. Where you really want to see this is just kind of riding this middle line right here, right? So you can see one right here. This would be parity. This would mean there's a total, equal number of put contracts being traded to call options. You want to be below that because you can see anytime you get above one, that typically is, when people are really selling stocks really hard, buying a lot of puts. But you can see kind of the median, the kind of sweet spot in this chart is right along in here, being somewhere, roughly at 0.9. Because that's in a healthy bull market, you're going to have more calls being traded than puts, but not too much so, right? So you see that's kind of right along in this midline. If you could just draw a line right through the middle of all this noise on the chart, that's where you want to be. And if you go all the way to the right-hand side of the chart, that's exactly where we are. We can see, that investors with the options in their portfolio are not positioned, whether exuberantly bullish and, over the top bullish, things are really nosebleed long-term overbought, but they're also not expecting a significant pullback coming up either. If they were, you would see that based on the number of options that are getting traded and how people are positioned. We're just not seeing that here. So even while Helene and I, we can see clearly in the charts that they're signaling, some short-term overbought signals, that we're likely going to have a small retracement coming up. In the medium to long term, investors are just not positioned. This is a great, as I said, temperature gauge on the market. You're just not seeing that from investors, that they're anticipating some type of significant pullback at this point. So that's just another really nice sentiment indicator here for the markets, for portending towards the medium and long term, that we have a pretty nice setup in front of us. So Helene, anything you want to touch on there, or should I go ahead and hop into my trade for today?
I think you're gonna go ahead and hop into your trade, Blaine.
Will do. All righty. Well, the trade I have for you today, everybody, is this one right here. It is Dell Technologies. You're probably pretty familiar with this stock, been around for a long time. And I came across it because they have a great technical buy signal going on their chart right now. So go ahead and hop right into it, cut to the chase. You can see we have a red line right here. It's our 21-day EMA. It's trading above our green line right here, which is our slightly longer term 63-day EMA. So you can see our buy signal initiated right here back in mid-May of this year. Had a nice bullish convergence and crossover as the stock was breaking out, coming out of those April lows. And stocks continued to trade higher. It had a bit of a consolidation shortly after that buy signal triggered, but again, towards mid to late June, stock began inflecting higher yet again, trading higher, and continued a nice bullish series and making nice higher highs and higher lows. Hasn't quite broken out to new 52-week highs quite yet, but it's certainly within sight. You could probably get there in the next 3, 4, 5 weeks or so if it continues this nice trend it's on right now. But again, you can see that actually the distance between our two EMAs is actually starting to widen out. That distance is widening out between the two of those. So that's indicating a strengthening technical buy signal.
Mhm.
And then also have our counter channels overlaid on our chart here too. You can see here's our upper counter channel band right here. Again, this is one of our favorite overbought, oversold indicators. So in the short term, when a stock is trading above that upper counter channel band, outside of it, that's signaling that it is trading in slightly overbought territory. And when I saw this one earlier, it was actually a few cents below it. It looks like it's kind of riding that line right now. It's just a touch above it, but if you watch it throughout the day, I'm sure it's going to dip back down just below it
Yeah.
because it's right on that line. So this one that is not, it's not certainly in like nosebleed uh overbought territory like some other stocks, and the market is kind of in short term right now. So this was a really strong looking setup. And again, in markets like this, when you have a really good bullish market running, but even when the anticipating that the index level things are going to start having a retracement, cooling off a bit, you want to be targeting stocks that are having really strong relative strength compared to the index. That's what I personally like to do. I think there's a lot to be said for that. It means that they're they're displaying outperformance compared to stocks broadly, and you can see that's exactly what Dell has been doing of late. That's what this chart is doing right here. This is another ratio chart, and it's just looking simply at the price of Dell compared to the S&P 500. And all you need to do, you can ignore the numbers over here on the side for this chart. They don't really matter. But as long as you're seeing this number slope up, which you have been over the past couple of months, that is signaling that Dell is outperforming the S&P 500 index. So that's exactly what we want to see, really great relative strength from Dell stock over the past couple of months. And so because of that, showing that great relative strength, I would feel comfortable actually looking to trade this one using a directional call option purchase. So I actually landed on the August 8th options right here and the 115 strike in particular. So I took that one, put it into our call option purchase calculator here. Of course, you can see I plugged everything in, hit our calculate button to pull up our analysis, and you can see it actually does at this current price right here shown. It does meet the 1% rule. So if you were following the traditional power trend system, this option would actually meet those criteria. And then, of course, you can see looking up the scale here at some of the larger potential moves in the stock, you can see some really nice performance here shown. You can see, if Dell were to increase by 10%, well, you can see, it's a nice 9-to-1 outperformance in that scenario right there. This call option will actually be set up to produce a 90.5% return in that price change scenario. So really nice risk reward with this one. So it looks like some really nice potential upside should Dell continue its run. So that was my trade for today.
I like it. I like it. Dell is one of those stocks that's in a hot sector, but you don't hear about it too much because it's not as exciting, maybe. But it's clearly outperforming very quietly, and it probably should get more attention than it is getting. So it really is a hidden gem, in my opinion.
Yep, absolutely. Well, hey, that's what we're here for, is to help try and identify those, right? And, kind of show people how we would build the technical case for, looking at a trade entry. So appreciate you.
Exactly.
Thanks for the nice comments on that. I'm glad you like it.
I'll go ahead and
So
jump
what do you have,
in
Lane?
to my trade. Mine is for Lowe's, not the store, but the holding company.
Okay,
Um,
interesting.
I feel like they're a lesser known company, but they are quietly outperforming, kind of like another little hidden gem. So as I said, they're a holding company. They're involved with insurance, and also they do work with pipelines and energy. They also have hotels and a packaging company. So they're a really well diversified long term investment holding company. So when you are, buying them, they're not just pigeonholed into one specific um, industry, which is nice. And as you can see, they are on a great trend. I like to look at the 35-day EMA as well as the 200-day moving average to confirm my bull trend. As you can see, that green line is the 200-day moving average. Lowe's is trading above that level, confirming the long-term bull trend. And then the 35-day EMA is this red line here, and oftentimes when we see stocks in really strong bullish trends from our testing, we've seen that they trade at or above this level, and oftentimes they even will bounce off of this. And so that's what we're seeing today with Lowe's. As you can see, they traded down. They just about hit that 35-day, and then they bounced off of it. Earlier, they were a little bit closer to their highs of the day, but still very bullish sign when a stock goes down towards that middle channel, towards that 35-day EMA, bottoms out and then bounces up off of it. So that should be a reversal of a trend that we're seeing there. And so with Lowe's, I also added on the RSI. That's another overbought, oversold indicator that we like to reference. It's not currently overbought because it's trading below 70. It's not oversold. It's above 30. It's right in that middle area. It's at 52.18. And then within the counter channels as well, as I said, it's currently bouncing off of that middle channel. Another sign of something that only bullish stocks and very bullish trends do is they trade at or above that middle counter channel, which is what we've seen from Lowe's over the past couple months after a bit of a consolidation period in that May-June timeframe. They're clearly trying to break out and enter into new series of higher highs and higher lows. And we've seen the start of that already. It really started mid-June. We started to see that break higher and then a higher low right there, another higher high, late June, early July, and then this would be a higher low here. So it appears to be primed to break higher. And because of that, I decided to go with a directional play. I'm looking at the August 15th, and I'm looking at the 80 strike call. Now, this is pretty conservative in the money percent wise, but it is the first strike that meets the 1% rule. If you're not familiar with the 1% rule, we like to pick options where the stock only has to move 1% or less by option expiration in order for you to start making money on your trade. And this is because by limiting that time value in your option, and limiting the amount that your stock has to move in order for you to profit, that increases your likelihood of profitability and increases your percentage of winning trades. So I'd be looking at that August 15th, the 80 strike call. It is currently trading at 11:30. And as you can see, the stock only needs to move 0.86% between now and option expiration in order to start profiting. So anywhere above that 0.86% stock move would be a profit for the option.
Awesome. Well, that
Yeah.
looks like a great trade there, Helene. I
Thanks.
like the chart. It's just like kind of a nice steady eddy, just kind of grinding higher. It's not, it's not one of these, crazy explode 10% in a day stocks, but I mean, it's undeniably been on a great trend the last, what, 7, 8 months there. It's your 9 months you're looking at. So,
Yeah, it's not
um,
parabolic, but not every trade has to be, right?
no, yeah, of course not. No, there's absolutely space for a trade like this. It's as I said, it's just on a nice, consistent grind higher. Just making those new higher highs and higher lows, just consistent. I mean, that's great. I love it.
Thanks.
Awesome. So great trade. Well, I think that was all the charts I had. Anything else you want to share today, Helene, before we go ahead and wrap things up?
That is all that I had for today as well.
Awesome. Well, I appreciate it. Well, thanks for bringing the great trade, Helene, and glad we could come here and perform some market commentary today. I mean,
Oh, yeah.
saw again a nice lift in stocks today. I think part of that was due to seeing the initial jobless claims come out this morning, and they came in much lower than the anticipation, and kind of have gotten back down into a level the market's really comfortable with. That had kind of cropped up as a concern in the last 4 or 5 weeks because they're starting to get closer to elevated territory, but have come back down, got back into a more comfortable level. So I think the market saw that today and was very excited about it. So
Oh, yeah.
that's probably what provides somewhat of an additional boost today, headed into next week. But yeah, have a little bit of trading left for the week. Definitely some great looking setups out there. There's some stocks that are really attractive looking. So I know we have to get hot back into it and start getting some trades out. I know there's some opportunities we want to capitalize on. But before we go, we do have a nice opportunity. I've gone ahead. You might have checked out the link in the chat I already just posted, but we actually have a free ebook for you today. So if you really enjoy these sessions, you enjoy seeing how Chuck and our team, we perform technical analysis, how we spot some of these opportunities in the markets, well, we have several ebooks that can kind of lay out various fundamental portions of our strategies. And I've included one in the chat today. It's one, give it away for absolutely for free. It's the Options Trading Made Easy. It's one of Chuck's favorite ebooks that he's ever done. So
Oh
if you
yeah.
go ahead and click the link in the chat, folks, it's already in there right now. If you don't already have that, highly encourage you to go ahead and check it out. It's a great ebook, a lot of great educational material in there. And so today you have a chance to get it for free. So you can't beat
Yeah,
that, right?
it's a great starting point, you know, if you're not familiar with options, or even if you are and you're just trying to get some more education on them, it's an awesome place to go ahead and dive in and learn our strategies.
Exactly. Yep. So highly encourage everybody to go ahead and check that out. Again, the link is in the chat, or if you're watching the replay, I'll make sure to post a link to it just below the video so you can check it out there. But I think that's it for today, Helene. So thank you everybody so much for joining us to watch today's Trade of the Day live. Again, love getting to sit down and do these with you. Helene, thanks so much. Appreciate the great analysis and helping out with looking at the charts. So I know
Yeah,
we need to get back to it.
same here. Thank you everyone for joining us today. We absolutely love these. And yeah, let's go ahead and dive back in.
Let's do it. All right. Well, take care, everybody. Have a great week, great weekend, and we'll see you back here next week.
Okay, see ya.
See ya.